Hi traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Now, are you only looking at one time frame when trading? If so, you are missing a huge piece of the puzzle. Now, multi-time frame analysis is one of the most powerful ways to confirm trends, avoid fakeouts, and fine-tune your entries and exits. In this video, I'm going to break down exactly how to use multiple time frames in your trading. We are going to go over what multiple time frame analysis is and why it is crucial. We're also going to be looking at the best time frame combinations for different trading styles, and we're also going to talk about how to avoid fakeouts and bad trades using multiple time frames. And finally, of course, I have to show you examples while I'm explaining all this, to show you how expert traders apply this strategy. So stay until the end because I'm going to be sharing a simple trick that will instantly improve your trade accuracy. And before we jump in, don't forget to hit that like button and subscribe if you're serious about leveling up your trading game. Okay, now let's just quickly start with the basics. What is multiple time frame analysis? Simply put, it is the process of looking at the same market on different time frames to get a clever picture of what is happening. So instead of focusing on just one chart, traders analyze a higher time frame, a mid-level time frame, and a lower time frame to make more accurate decisions. Why does this matter? Because price action looks different depending on the time frame you are viewing. For example, a bullish trend, right? A bullish trend on the 1 hour time frame might actually be a retracement on the daily chart. Can you see? Can you see that here we had something that seemed like a bullish trend? Where did I draw that trend line again? Okay, seems like it is not far away from. Okay, can you see this? This was actually a bullish trend, but on the daily chart, do you see that that is more of a pullback because we're having a general bearish trend on the daily chart? Then this was just a pullback. So can you see that? Now, another example is a strong support level on the 5-minute chart. For example, a strong support level on the 5-minute chart might not be significant at all on the 4-hour chart. Can you see? On the 4-hour chart, it seems useless, right? Because on the 5-minute chart, we already had multiple rejections. You can see 1, 2, 3. 1, 2, 3. Although this one seemed like a false breakout. But on the 4-hour chart, can you see that? Well, it doesn't seem like a support yet. Okay, then another example is a breakout trade on the 15-minute chart. Let's just see if we can find a breakout real quick. Okay, so a breakout trade, for example, let's say this breakout that we had around here, a breakout on the 15-minute chart might be running straight into resistance on the 1-hour chart. Now, understanding the bigger picture helps traders to make better, more confident decisions. Now that you understand the concept, let's talk about the best time frame combinations based on your trading style. For swing traders, right? For swing traders, your higher time frame can be the daily time frame to identify major trends and key levels. All right, the daily time frame is just going to be to identify the major trends and key levels. Then your mid time frame could be the 4-hour chart to fine-tune your trade direction. Then your lower time frame could be the 1-hour chart for precise entries and exits. That is for swing traders, okay? Then for day traders, your higher time frame can be your 4-hour chart to understand the overall market structure. Then your mid time frame could be your 1-hour chart to spot trade setups. Then your lower time frame could be your 15-minute chart to time your entries and exits. Then in the case of scalpers, your higher time frame can actually be the 1-hour chart for your overall trend direction. Then your mid time frame could be your 15-minute chart for trade setup confirmation. Then your lower time frame could be your 5-minute chart to execute trades with precision. Now, using these combinations, traders can make more informed decisions and filter out weak trade setups. Okay? Now, one of the biggest mistakes traders make is entering a trade based on a lower time frame without checking the higher time frames. This can lead to fake outs and bad trades. All right? Here's an example. Imagine you see a breakout on the 15-minute chart. Right? Imagine you see a breakout. For example, let's say this, a breakout on the 15-minute chart, and you decide to enter a buy. Let's say you decide to enter a buy around here. But if you check the 4-hour chart, in fact, this is where it happened. The 4-hour chart, can you see that that is not even significant? You might say that the price is actually heading straight into a major resistance zone, right? So instead of a clean breakout, you get a false breakout and price reverses against you. And you can see that that's exactly what happened here. So here's how to avoid this mistake. You start with the higher time frame, identify the overall structure, overall market structure on the higher time frame. Then you use the mid time frame to look for confirmation of trend direction. Then you can now enter the trade on the lower time frame. You fine tune your entry with precision in the direction of the overall trend from the higher time frame. By following this method, you increase your accuracy and avoid unnecessary losses. Okay? So, given all these that we have talked about, you're going to see that multi-time frame analysis is effective and it is really beneficial. In fact, it is necessary. It is really necessary, okay, to avoid fake outs, to avoid unnecessary losses, to get an overall picture, all right, to get the bigger picture before niching down to find precise entries, and exit points. Okay, basically to find precise entry points, actually. All right, so do you use multiple time frame analysis in your trading? Let me know in the comments below. If you found this video helpful, make sure to hit that like button. It really helps support the channel. And don't forget to subscribe to the channel and to turn on notifications so you never miss any powerful trading strategies that we post like this one. In the meantime, thank you for watching and I hope to see you in the next video. Happy trading.